It's Tuesday, December the 3rd, and let's try to make sense of what happened today because volume in the Dow was above average, pretty significant in the NASDAQ, and look at this drop right at the open. A lot of that was Apple and probably Amazon and Google. We're going to find out. S&P 500 average volume, big drop at the open, and then we just drifted and we finished the day moving upward. So that could be a good sign, but let's take a look at the ES. This is the futures trading. Our Globex high was made at 4 o'clock in the morning, which coincides with 9 o'clock English time. Trump got into a pissing match with Macron, got his feelings hurt, and as babies do, decided that he was going to take his football and go home. And on the way, he was going to make some stupid comments like 100% tariffs on French goods after having put tariffs on Brazil and Argentina before leaving for England because he had nothing better to do. And he had come back from Thanksgiving weekend, and I guess he was bored. And then he had the nerve to say that he wasn't going to make a deal with the Chinese till after the election because he didn't feel like it. When the truth of the matter is, he can't make a deal with the Chinese. And if you have been buying into his ranting, you lost a lot of money today. If you got out of anything serious that wasn't a good dividend stock or that was covered by short calls, then you lost a lot of money. You know that I sold Home Depot and Apple this week, and we're going to see how much that has saved us when we look at the charts. From that Globex high, we dropped to the Globex low, which happened exactly at the open. Dropped to 23.6 on the Fibonacci, moved up to 50% of yesterday's move, but still stayed below the prior day's low all the time, even though we tended to drift up. But look where the volume was. All this volume was in the first hour and 15 minutes. First 45 minutes. This is the pathetic volume that we had at the close. So there is no good news in that chart. FinViz shows you that the volumes in the Dow were significant, particularly high in the NASDAQ. Apple, and I'm sure Amazon, Google, Facebook, whom we don't follow, had this precipitous drop at the beginning on high volume. S&P 500, volume higher than we've seen, and it dropped quite a bit from its open. At least the NASDAQ started at its close of yesterday, but the S&P 500 closed with a big drop. The market breadth was, the advancers to decliners were 2-to-1, so I don't believe that this has been updated yet. It hasn't, but it is certainly going to take us down to the oversold line, at least. And that's something we've been expecting right here. Didn't happen. Happened back here in probably October. We exceeded that at the end of September, early October, and we've had other times when we've gone way below the oversold line, but we always snap back. We can stay oversold for quite a period of time, and if you look back last December, you can see that the momentum started here, and we took a long time to go to oversold and then beyond oversold. We've got 3 or 4, 5, 6, 7, 8, maybe 10 days or 2 trading weeks where we remain deeply oversold. And it can happen again. There is nothing that's good in the market right now. The S&P had this huge drop, finished a little bit up towards the day, so not at its lows, but look at where we are in, and I'm not going to explain this because I explained it in Friday's video, where these two trend lines come from. But we have rejection at this trend line from January of 2016. This trend line is from 1995 or 1996. And we're pretty much headed down to that trend line. If we bounce off that trend line, let's put an alert right there. And with good old motive wave, we can set alerts when something touches the trend line. And I'm going to set that. And let's see if we can touch that trend line and get a bounce. If we can, then we've established the validity of this wedge, which has the possibility of breaking out higher. But again, they don't always go that way, and we're not in a technical world anymore. We're in Trump's mixed up world, just to put it politely. Apple, big drop to where we put this green line, which was the top of this candle. So we put this line here for a reason, can't remember what it was, but certainly we said it was important. We came down to it and we touched it and then moved higher. I still see the 8 EMA moving down, so I still see Apple possibly in the position, because it's very China dependent, of making contact with the cloud sometime in the future and looking for its ultimate support there. And look at the volume. We had above average volume. Institutional traders were out trading today, not in force, but they certainly contributed to this above average volume. Caterpillar. So Apple was down $4.42, 1.67%, when the market was down 0.6. Let's take a quick look at the VIX. Do we see any fear in the market? Well, we should. And we do see it going up. I'm not going to let it spend too much time trying to find that chart. There we go. So we do see it going up, and it's making a significant push out of this channel. Once we get out of that channel, we tend to want to come back into that channel, except last fall, look how much time we fought breaking out of that channel before the year started, and we finally returned back to normal lack of fear in the marketplace. But we do see the VIX moved higher and then finish lower. It can still go higher, and I'm not in a position to buy, in a mood to buy anything. Caterpillar finished below 140. And why this is such good news for me is that I have been rolling 133 shorts for a long time, having a pretty darn good feeling that there would be no China deal this year and that Caterpillar would suffer for it. And it looks to be the case. So if I can get down below the 50, which is at 138, and the cloud is at 137, but if I could get down to this value here, 135, I would be sitting at a point where I could roll my short calls and just continue to pull in premium, but at a faster rate, because I'm no longer rolling when the stock is at 140, 145. I'm rolling where it's closer, so I have 135 calls. I'm sorry, I have January 135 calls. So I feel really good about that. Home Depot, you know, we got out of all of that trade on Monday, and it kept support at the 200. That's a good sign. Didn't quite come down to the 68.1%. Volume wasn't that high, so your institutional traders were not out in force. The Chiku span, which we were looking for making a bounce off the bottom of the cloud, did not. So we're now looking at this as possible support, or finding the Chiku span coming down to the 200. And that is entirely possible, but I'm out of Home Depot. It's a stock that I think should not be hammered the way it is, because I think it's going to be a good Christmas season, and Home Depot may just do okay. But I'm going to wait for my opportunity to get back in on those vertical calls, which ended up making about $600 or $700 for me. Nothing like the 8,000 if Home Depot had, gone out to completion and closed above 132.5. But it's what it is. You take money when you can and try not to leave any of it in the till. AT&T, because it's a dividend stock, started to get some buying at the end of the day. Although it did move down, it did get buying towards the end of the day, but this is pretty low volume. But I'm holding 1,500 shares of AT&T with short 33 calls and 33 calls? No, it must be higher than that. Doesn't matter. Yes, it does matter. I'm going to tell you where I am. I am holding on AT&T 10 short December 1938 calls, sorry, 5 of those, and 10 January 38 calls. So as long as we stay under 38 and we drift, I'm fine, because the dividend is going to be declared just before Christmas, and we're looking at a pretty nice dividend there. And that's why I'm holding the stock. WDC down 1.6%, Whirlpool down 1.4%, nothing to buy there. Amazon getting support in the cloud. Where's the Chiku span? Getting support on the 8 EMA. So that at one point we went as low as here in the day, well below the candle for the Chiku span support. But we did say that we were looking for the Chiku span to be our indication of support, and it does look like we're getting it. Doesn't mean we came up to the flat cloud. Flat clouds attract. Doesn't mean we can't continue to move down. Let's just hope Donald Trump doesn't say anything stupid. We also had the threat now of North Korea telling us that we're in for a Christmas surprise. What else? We're not following the rest of these stocks too closely. So tomorrow, VIX pulled off at the end of the day. Volume was high. SPX ended higher at the end of the day. I don't care what anybody says, Jim Cramer or anybody else. I only lost $400 today in a market that was down 20 points, and the Dow Jones that was down almost 300 points. So I feel pretty good about my position of about 60% cash.